Okay guys, we've got a very serious video ahead of us. Today we're going to talk about the Ethereum ETF approval or denial. Don't expect any fancy edits or anything like that. This video is to only provide you with value and perspective, and this is not financial advice. Now, according to a Bloomberg ETF analyst, the chances of approval in May are only 20%. I seem to agree with him, and in this video I'm going to explain why. But before we get to any of that, guys, please, if you value the perspective and opinions I bring to you, like the video, subscribe to the channel, and click that notification bell. Now let's get into the video. Okay, so the first and most important thing you need to understand is how the SEC determines something is a security. And they do this using the Howey Test. Now, what is the Howey Test? Well, the Howey Test is a legal framework that determines whether a transaction qualifies as an investment contract and should be regulated. An investment contract has to meet the below criteria. 1. An investment of money. 2. In a common enterprise. 3. With the expectations of profit. And 4. Derived from the efforts of others. So in order for a transaction to be a security, it needs to have an investment contract. And what's an investment contract? Well, an investment of money in a common enterprise with the expectations of profits derived by the efforts of others. Okay, knowing this, let's see if buying Ethereum fits that criteria. Is it an investment of money? Yes. In a common enterprise? See, this is where it starts to get a bit foggy. The reason why is because Ethereum is a decentralized blockchain network, not a common enterprise. So, I suppose not. With the expectation of profit? Well, yes. Why else would you invest? Derived from the efforts of others. Well, I'm not going to be doing anything with that Ethereum, I'm just buying it. Other people might build something on the blockchain or do something else on the blockchain, but I will probably be just holding the Ethereum expecting that price to rise. However, these are separate entities that will be building and doing things on the blockchain that will drive a wider adoption and increase the value of Ethereum. So it's not the blockchain itself that's increasing the value of the token, it's other people building on the blockchain. Now, things get even foggier when you add staking to the mix. The reason why is because you invest your money into Ethereum, then you give your Ethereum to a common enterprise, like let's say Lido Finance, by staking it with them, with the expectation of profit, because you will not only expect the Ethereum's value to go up, but you will also be receiving rewards from Ethereum staking derived from the efforts of others. Well, you're not doing anything with the Ethereum is just staked on the blockchain. So can you see how things are a little bit more complicated than it seems? And the reason why is because there aren't clear regulations. The Howey Test does not account for a decentralized blockchain network. That being said, in the case of SEC against Ripple, the judge ruled that Ripple itself is not a security. However, the initial coin offering ICO of Ripple was an investment contract and therefore violates securities laws. Now, that being said, in the most recent case of SEC against Coinbase, the judge ruled that secondary sales of cryptocurrencies on exchanges like Coinbase do not fit the criteria of an investment contract and therefore do not violate securities laws. This is because crypto sales or crypto trades on exchanges is done by having two decentralized wallets connecting to each other via the exchange and trading crypto between each other. So to sum this all up, an initial coin offering of a cryptocurrency is an investment contract and violates securities laws. Secondary sales of cryptocurrencies are not an investment contract and do not violate securities laws. So this means that the ICO of Ethereum was an investment contract and the SEC have the necessary ground to sue Ethereum because they were not registered at the time of ICO. And this right there is the first reason. The second reason is staking. And in all honesty, there isn't much regulation or clarity around staking. The only thing we've heard from the SEC regarding staking and staking contracts is when Gary Gensler came out shortly after Ethereum switched from proof of work to proof of stake, and he said the proof of stake cryptocurrencies could resemble investment contracts and therefore be classified as securities. Okay, so now we have two reasons as to why the SEC might decide to sue Ethereum. The first one is the Ethereum ICO, and the second one is Ethereum staking. But if the SEC have ground to sue, why are they not suing? Well, let's find out. This is an article from the block and it says the Ethereum Foundation has received a confidential inquiry from a state authority. But if it's meant to be confidential, how did we find out? Well, that's a very good question. Do you see this little canary right here? So back in the days when miners would go into a mine, they would often bring a canary with them, and if that canary dies in the mine, it means that there's a gas leak somewhere in the mine and all miners should leave immediately. Now what Ethereum did long ago is they put a picture of a canary on their website, and they specifically said that this picture resembles a canary in a mine, and as long as it stays on the website, it would mean that they have not been contacted by any state authority asking for a confidential inquiry. And what did they recently do? Remove that canary from their website. And not only that, but it also removed text that said the Ethereum Foundation has never been contacted by any agency anywhere in the world in a way which requires that contact not to be disclosed. We now know that they have been contacted by a state authority, and that state authority has asked for the contact to remain confidential. Now again guys, this is not investment advice, but analysts are speculating that this is the SEC issuing a subpoena to the Ethereum Foundation. Now guys, I'm briefly interrupting this video because you need to understand how important this subpoena is. You see, in order for the SEC to issue a subpoena, there needs to be something called a formal order of investigation that is approved by the commissioner. These formal investigations are usually not public, but some of the common violations include selling unregistered securities, stealing customer funds, insider trading, and manipulating market prices. So although they're testifying in court, this might turn to be something a lot more serious. And we may have recently found out why that subpoena was issued. You see, UNISWAP just received a Wells notice from the SEC, and the SEC is accusing UNISWAP of acting out as an unregistered securities broker and an unregistered securities exchange. So this can potentially be the reason why the Ethereum Foundation was called into court. Now the founder has vowed to fight, and this is really good short term, but you can already see that a lot of companies related to Ethereum are being taken to court by the SEC. And just so you guys know, a Wells notice is a letter sent by a securities regulator notifying a company of the charges the regulator intends to bring against them and allowing them to submit a written statement to defend themselves. Now, although Uniswap can defend themselves with the written statement, 80% of Wells notices end up with a lawsuit. So the stats are not in our favor. Now you can already see how companies related to Ethereum are being targeted by the SEC. And this happened only after the SEC calls for extra 158 million to go after crypto. The SEC requests more funds to tame the crypto Wild West. This just shows that the SEC is not ready to stop here. Adding that to the two reasons as to why the SEC can already sue Ethereum leaves us with not much room to speculate what's next. Now back over to the video. So what can we expect if the Ethereum Foundation is being sued by the SEC? Well, of course Ethereum will drag down the whole market because Ethereum is not the only proof of stake cryptocurrencies, and if Ethereum is being sued, then other proof of stake cryptocurrencies will get sued as well. So expectation number one, a massive retracement of the crypto market. We'll evaluate how drastic that will be in a minute, but first let's talk about the CFTC. The CFTC is the Commodities Futures Trading Commission, and they've already said on multiple occasions that Ethereum is a commodity and not a security. And they've reiterated that once again in the very recent complaint against KuCoin, which happened only a couple of weeks ago. So if the SEC decides to pursue a lawsuit against Ethereum, calling it a security, we should expect some sort of comeback from the CFTC because the two government agencies will go into direct conflict with each other. This is very good news. However, this is not enough to get us the approval of an Ethereum ETF in 1.5 months. These sort of lawsuits usually take years to unravel. So be sure that if the SEC decides to sue Ethereum, we are not getting an ETF approval in May. Okay, so if the ETF gets denied, what happens to the crypto market? Well, this is the Ethereum chart, and as you can see currently we're sitting around $3,300. If the ETF gets denied, this will be detrimental for Ethereum, and not just Ethereum but the whole crypto market. So we can expect a retracement to a previous support level. And if we go onto the weekly chart, you can see that this area over here is where prices struggle to either go below or go above it. And even when we finally broke through, it took us 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks to do so. This means that this is probably the level that Ethereum will come down to. So this area is roughly between 2,500 and 2,200. And what's even more interesting is that if we go to the Ethereum liquidation heat map, and if I remove my camera, we can see that the liquidation leverage is very high around that area. And you see what price likes to do is to go back to these areas of high liquidation leverage to liquidate these orders and then continue to go up. And this is not just for Ethereum, guys. If we look at the same chart but for Bitcoin, now this is Bitcoin, and you can see that there's two high time frame levels, one around 52k and the other one around 42k, where prices struggled to break through. And if we go back to the liquidation heat map, but for Bitcoin, we can see that similarly, these zones have very high liquidation leverage as well. This is the one at 50k, which is slightly below, and this is the one at 42k. Okay, so now we know that if Ethereum ETF gets denied, these are the potential price zones that we can go down to. And the way I'm preparing for this is by slowly taking money off the market and putting it into USDT or USDC, because a retracement this low will completely reset the crypto market, giving us an excellent opportunity to buy the dip. And in my next few videos, I will give you the exact narratives and coins that you need to be looking at and buying if the retracement occurs. Some of the narratives I'll be looking at will be gaming, AI, Deepin, and meme coins. So keep an eye out for those videos and make sure you got the notification bell so you watch the video when it comes out. What's more is I'll be looking for high momentum projects, which means that when the market starts going back up, these coins will be one of the first movers and they will have one of the largest momentum gains. Alright guys, with this we're coming to the end of the video. If you like the information I provide to you, make sure you subscribe and you follow me on Twitter at Alex Yanokov. Goodbye and see you in the next one.